Welcome to Leadquake video. In this edition, we will be exposing one area of our national life that requires much attention. Now, one word to define this area, of our national life that is being treated with levity by all that is concerned, but all that are concerned, is compliance. Now, let me ask you this. Do you know that the failures of most companies in Nigeria to provide you with efficient and quality services is as a result of regulatory paralysis? Do you know that if our regulatory agencies are performing optimally, organizations in the public or private sector will perform better and pay more attention to how you feel about the quality of their service? But as it is, it seems like companies and agencies don't bother, they don't care about how you feel about their service, and they carry themselves as if you owe them patronage. Now, in the real sense, an effective regulation is supposed to ensure that companies and conglomerates, multinationals and multilateral organizations operating in Nigeria must comply with extant rules and regulations designed to protect citizens and customers. This is what regulation and the different regulatory agencies in Nigeria are designed to achieve. Now, to ensure that whether local or international organizations, multinational or multilateral organizations, they all comply with the external rules and regulations of the country, as well as to ensure that competition is healthy and quality is maintained and sustained. But why there are multiple regulatory agencies scattered in different sectors across the country, we can tell you from our vantage position that there is an increasing state of ineffective and inadequate regulation in the country, hindering economic growth, stifling innovation, and undermining investor confidence. So in this video, we want to expose the regulatory paralysis that is bedeviling our country and to expose the failures and lackluster performances by comparing local regulatory agencies with their international counterpart. But first, I want to thank you for stopping by to watch this video. Now, if you have not subscribed to this channel, please hit the subscribe button, like and comment on this video to enable other persons to have access to this information. Don't go anywhere. We'll be right back after this very short break. Welcome back to Leadquake video. Now, why regulatory paralysis affects growth, innovation, and investor confidence in our economy? An effective regulatory environment is expected to encompass several elements that contribute to effective regulation and promote economic growth, consumer protection, and investor confidence. It means that agencies working in the regulatory environment are supposed to have a high level of independence, clear and transparent regulatory framework consisting of clear, well-defined, and easily understandable regulations and laws. These regulations should be accessible to the public and stakeholders, providing transparency and predictability in compliance requirements, proactive monitoring and enforcement, including inspections, audits, and surveillance activities, and more so, regulations are expected to have enforcement powers to take appropriate actions against non-compliance institutions or organizations, including fines, penalties, and other sanctions. Most importantly, regulatory agencies are expected to be promoting international harmonization of regulations by aligning local regulations with international standards and best practices. However, while we have various agencies assigned with the responsibility of ensuring effective regulations, an analysis of the quality of services by the public and private sector leaves nothing to be desired of the impact of our regulatory agencies in Nigeria. Now, how are the regulatory agencies in developed economies functioning such that the global companies that we know today, beyond offering efficient and quality services to customers or consumers, These companies are able to innovate and stay ahead of competition. Now, to help us understand some of the differences between the way that the regulatory agencies in developed economies operate and the way that regulatory agencies in our country and even in Africa at large are operating. First, let us take a critical look at the public sector service delivery. And the first that we're going to take a look at is the power supply, electricity. You know, where of course now we have different AEDC and PHCN and all that, but in the past few years we have been inundated with increase in electricity tariff. Meanwhile, frequent power outages, inadequate distribution infrastructure, and insufficient electricity generation capacity have continued to impact businesses, industries, and individuals. Worst of it all is the fact that Nigerians are made to pay for these infrastructures. For instance, if you are in a certain location, especially the rural areas, and your power infrastructure like the electric pole, the transformer, or any of its accessories get spoiled, the citizens living in those areas will be forced to pay for the replacement of these infrastructures, and they will still be made to pay for their light bills. Now, another sector of attention is the healthcare sector. Now again, issues such as inadequate infrastructure, limited access to quality healthcare services, shortages of medical professionals, and the lack of essential medical equipment and supplies in public hospitals and clinics has contributed to poor healthcare outcomes and limited access to affordable and timely medical care for citizens. This has resulted in public healthcare centers and hospitals ripping off citizens through the payment of premium on private hospitals that are owned by the same healthcare practitioners that were employed in the government hospitals. Now let us dive into the private sector space. Now let's start with the telecommunications sector. Interestingly, it is true that Nigeria has experienced significant growth in the telecommunications sector. However, challenges such as poor network coverage, dropped calls, slow internet speeds, and inconsistent service quality persist in almost all the areas. These issues impact the accessibility and reliability of telecommunication services and impact negatively on businesses. Now, in the banking and financial services sector as well, we are witnesses to challenges such as long queues, inefficient customer service, delays in transaction processing, and limited access to financial services in rural areas. These issues, of course, hamper service delivery, especially for individuals and businesses that rely on banking services for their daily operations. Again, if we look at the internet service providers in Nigeria, their services have been characterized by issues such as slow internet speeds, unreliable connections, and limited coverage in some areas. These challenges affect businesses, individuals, and the overall digital economy, which the government has been touting for some time now, hindering productivity and growth. Now, there is nobody that is considered to have a monopoly of good behavior. In fact, under the economic theory of deterrence, an increase in the cost of crime should deter people from committing the crime. And there is evidence that individuals who believe they are likely to be arrested and punished are less likely to commit a crime than those who do not expect to be captured or punished. In developed economies, this theory is effectively implemented as punitive measures are employed to enforce regulatory compliance by all companies and corporations. This is being done by leveling of fines. Now, fines are a common tool used by regulatory bodies to penalize organizations that violate regulations. Tech companies, pharmaceutical companies, and financial institutions, as well as other sectors, face substantial fines for various infractions. Now, for example, in the technology space, in the United States, Facebook and other major tech companies has faced multiple fines for privacy breaches and violations of consumer protection laws. For instance, in 2019, the U.S. Federal Trade Commission, a contemporary of Nigerian Communications Commission here in Nigeria, fined Facebook $5 billion for mishandling user data and failing to protect user privacy. The fine was aimed to hold Facebook accountable for its privacy practices and encourage better data protection measures. In 2018, the European Union's antitrust regulator, the European Commission, fined Google $5.1 billion for abusing its dominant market position with its Android operating system. The fine was also aimed to deter anti-competitive behavior and promote fair competition in the technology space. In the pharmaceutical industry, for instance, in 2020, Johnson & Johnson agreed to pay $8.3 billion to settle multiple lawsuits related to the marketing of its prescription drugs, including allegations of deceptive marketing practices, off-label promotion, and inadequate warnings about potential risk, which was brought to court by consumer watchdogs like NGOs working with government agencies like NAFDAC that we have in Nigeria. Now, the fines sought to address the company's misconduct, compensate affected parties, and discourage misleading marketing practices in the pharmaceutical industry. Again, in 2009, Pfizer was fined a record of $2.3 billion in the United States for off-label promotion and illegal marketing of several of its drugs, including the painkiller Bextra and the antipsychotic Giodon medicine. The fine was also aimed to penalize the company for fraudulent marketing practices, protect public health, and deter similar misconduct by other pharmaceutical companies. We also have in the financial institution sector, for instance, in 2016, Wells Fargo, one of the largest banks in the United States, was fined $185 million for opening millions of unauthorized customer accounts to meet sales targets. The fine was intended to punish the bank for its unethical practices, compensate affected customers, and deter fraudulent behavior in the banking industry. We have all these examples as well, happening in Nigeria. Now, one of the motivating factors for this video is to find out why are the regulatory agencies in Nigeria are not leveling heavy fines on companies that commit these same infractions. While we have seen some fines levied by the NCC, for instance, to some telecom companies, and even the CBN, most of these fines are not in response to customer-related infractions like poor quality of service. So it is important that we call on our regulatory agencies to pay attention to increase regulation on the quality of service in the country. Now, many persons might want to argue that these infractions by these companies in developed economies might be different from what occurs in Nigeria. Now, to clear every doubt that you may have with regards to the severity of these infractions and their impact locally or globally, let us examine the infractions by sectors. And first, let us examine privacy breaches in the technology space. Now, just like Facebook was fined in the United States for privacy breaches, Nigerian tech companies have also been subject to scrutiny over data privacy concerns, just as Facebook has also been accused to allegedly breach privacy concerns in Nigeria. Now, there have been cases of personal data breaches and unauthorized sharing of user information by some tech platforms such as Twitter and Facebook, even some local tech companies that we know of that are, exhibiting these infractions. But we are yet to see the Nigerian Technology Development Agency, NITDA, to fine most of these companies. In the pharmaceutical industries, we also have misleading marketing practices, like cases involving pharmaceutical companies in developed economies that have also been witnessed in Nigeria. For instance, some companies have been found to promote drugs for unapproved uses or make false claims about the efficacy or safety of their products. But we have not seen stringent measures adopted by NAFDAC compared to the fines imposed on companies like Johnson & Johnson or Pfizer in developed economies. Again, in financial institution sector, we have faced challenges in Nigeria related to fraudulent practices in the financial sector, including instances of money laundering, insider trading, and misappropriation of funds. However, fines and regulatory enforcement on this bank by the CBN have not reached the same magnitude as those seen in developed economies. The fines imposed on Nigerian financial institutions for similar infractions are relatively lower and in most cases not significant. There is no gainsaying that in Nigeria, addressing regulatory paralysis and strengthening the enforcement of regulations remain an ongoing challenge that require sustained efforts to promote compliance, protect consumer interests, and foster a conducive business environment. It is therefore important for the current administration to commit more resources and avail regulatory agencies with the independence they require to enhance regulation and protect citizens' rights, especially as it concerns quality of service. Thank you for joining us in this video. Until we come your way again, bye for now.